Hello and welcome to our look at peaks and valleys. If you trade any type of financial instrument for any length of time, you'll begin to notice that there are peaks and valleys in the market. So, for example, here we fall, then we rise and we fall. We just kind of go back and forth. Even when you're in a downtrend, you still see that we retrace every once in a while. When you zoom way out on the chart, you can see that this phenomenon repeats itself time and time again. This is the pound versus the US dollar. And you can see that even during this downtrend, there were times where we rose, snapped back quite significantly occasionally, but continued to go lower. So, how can you use this information to your benefit? Well, you can use it to make sure you're with the right side of the market. So, for example, when the trend changed to the downside, which is about here on the chart, there were a couple warnings. When you look at this, and I'll go ahead and switch over to a line chart to make this a little bit more clear, you can see that we had been going higher for a while. But what happens is eventually the low that the market makes is lower than the previous one, and that shows a real weakening of the market overall. So, a lot of traders will use that as confirmation of a downtrend continuing in this case. We had bounced significantly, now we're rolling back over. You can see that from this point, we went higher, we pulled back a little bit, but couldn't go as low as previous, and then went higher, and then pulled back, but not as low as we previously had. We essentially made higher lows. That's a sign of buying pressure. The same thing can be said in the other direction. We are making lower highs now, and every time this market goes lower, it has a bounce from a lower point. So we are gradually stair stepping our way lower. This tells us that we should be buying puts in this market. It doesn't necessarily tell us when, at least not in the daily time frame, but the shorter time frames do the same thing. This tells us we are looking for puts on shorter time frames in order to go with the overall trend of the market. That is generally the safest way to go. One thing that I would have you look at is in this particular instance, although we did go a little bit lower and then we bounced a little bit higher, um, from there we were still lower than the previous high. So that's a downtrend. However, we fell and then bounced again. But what makes this a false signal to turn around is the fact that the low could not break above this. So in a sense, it was a little bit of a knee-jerk reaction and then we continued going lower. So remember, it is all about where you peak and bottom on a trend, and in this particular case we are seeing the highs and lows do this, and that tells us that the sellers or the put buyers in the binary options markets are gradually pushing pressure on this market enough that it is falling in value. Again, though, if we make a higher high, if we rally from here and then do this, then that shows that the buyers are starting to pick up strength as well, and then you're starting to look for calls on shorter time frames.